Long-term viewers of this channel will notice a couple things different today than usual, and I want to address those things so we're not immediately coming to any sort of subliminal conclusions or anything. One is that I'm not wearing glasses. I unfortunately broke my glasses over the weekend and don't have a backup pair. It is what it is. I'm going to be getting those back. The other is change of scenery a little bit, move some stuff around in my room, my living room. And just want to clarify, I'm not trying to put out any subliminal messages because of that. We're going to stick to the fundamentals and the facts, and we're going to get into those now. So we obviously experienced a tremendous run year to date. There's, a bunch of technical factors that can explain this, or at least explain some of the fuel to the fire, because it was a pretty tremendous fire, and we'll start getting into that. So ARK had its best month on record. Not a totally unusual thing when the stock is down for them to have a good percentage month, but as far as I'm aware, the environment is not so conducive to that. It's not implying that ARK should go up. Capital markets are going to continue to get tighter. Money is going to continue to be drained out of the system. So I don't think that was necessarily a fundamental move. I think it was probably something more like tax loss selling being one of the forces. We'll get into the other forces in a second. Tax loss selling. Towards the end of the year, people had tremendous losses, and something to do when you have tremendous losses that continue to build throughout the year is realize some of those losses so you can lower your tax liability. So I think a lot of tax loss selling occurred towards the end of last year, left a little bit of an air pocket in overbought versus oversold, the near-term decision-making and transactions that would occur, and that kind of gave us some fuel for the fire to start the year. Additionally, we did string together some good inflation data. We did kind of get some less than expected month-on-month job increase data. So the bulls took that data, those few pieces of data which the Fed did not want to take in isolation, did not want to solely rely on. They wanted to get a little bit more data than that. The bulls took that data and, hit a home run with it. They went all the way, full extrapolation, and now gas prices are up over 10% year and month to date, and we'll see if CPI continues to fall. My understanding and my expectation is it's more likely to be flat to, I guess that is a pause and a break in the continued decline. I think the rate of change is going to slow, if not stall, if not slightly reverse. But obviously the data remains to be seen. Ultimately, I don't think January was the same kind of inflation falling month that the past 3 or so months have been. So we're obviously going to get that data, and we're going to hear from the Fed tomorrow. Finally, China reopening. People viewed this as, anti-recessionary. China reopens. Therefore, bad things are in the past and good things are in the future. Well, bad things can happen with China open. China's been open in more economically volatile periods, and I'm not expecting China to make a massive run to maximum economy. Yes, they're going to be a more open economy, and there's going to be some things we're going to talk about later in this video that pertain to China specifically, but there's no reason to believe that we're in a new, total different, like a new high in terms of the Chinese economy and therefore the world economy or something like that. I don't see the signs of that. I see not being in lockdown being a good thing, but ultimately the economy not being in as good of a position as it was, at least in terms of nominal terms, when money was being printed. There's plenty of literature on the benefits of printing money for the economy. But one of the costs of that is inflation, and it requires some pain and the opposite of the good stuff to bring inflation down, and that's what the Fed's doing. So we had tax loss selling, leaving an air pocket. We had some positive pieces of information leading to a bullish rally, but those all being, just taken a little too far, leading to, a 70% run in Tesla, ARK best month in history, Lucid up 90% a day, all these things that are the signs of euphoria not being something we want to partake in. If anything, we want to go against, because the euphoria can't last forever. It never has, and it never will. So that's that. We're beginning to see the decline occur now. We think this is going to continue. We think, the Fed is going to be hawkish. They have been hawkish. The market is very diverged from where the Fed is. That divergence in the past has caused them to be very hawkish to address the market mispricing. And they're not going to try and, have poor communication with the market. If the market is misinterpreting them, they're going to try and make sure that the market accurately interprets them. So I expect the Fed to address the market pricing of its expectations for the federal funds rate, which will have impacts on the broader market overall. That will probably lead to some declines. And I think it's no surprise that the tech companies that I expect to experience the most weakness are the ones reporting the day after the Fed. There's going to be a lot of noise then. It's going to be a lot of chaos. They can kind of put themselves in that. And I don't blame them. I think this is actually the right decision. If I were managing one of these companies, I would do it because they experienced a boom. COVID was fantastic. Everyone having tons of printed money was fantastic for them. But now that money's coming out and they're being hurt. And it's no fault of the iPhone. It's not a comment on the Apple products that, the earnings might not be good. And, the economy is weakening and the Fed is tightening. It's just a force of the macro. And that's going to affect a lot of things. They got a big boom on the upside because of the macro, and now they're going to have to pull back because of the macro. That's just the way the market works, and we acknowledge that. We're market participants. We work within that paradigm, and we make our decisions based on that paradigm. We're not going to fight the Fed. We're not going to fight the way the market works or any of that. We're going to predict how things are going to occur, predict what the Fed is going to do, see where the market is relative to that, and make our decisions based on that. I think that's a very reasonable way to approach the market. And that's what I'm trying to share with you in these videos every day is my work on that, whether it be right or wrong, just for you to digest. So I do think Apple is going to have a not so good earnings report. Microsoft saw device sales down 39%. Intel saw some serious weakness in PCs. That is Apple's area. Again, I'm recording this on an iPhone. I've got a Mac here. I've got my notes on an iPad. I like the company. I like the products. I would love to be a shareholder at some point, but I haven't been a shareholder for the last probably 2 years. The stock has just been expensive relative to history, relative to where I think the long-term growth rate and cash flow is. It experienced a big boom. The stock really rallied. It's still kind of in that upside channel or that upper level stratospheric channel. Once it breaks that, once it pulls back down, once the chart looks a little bit more like Tesla, then maybe I'll consider buying some. These are not, expectations and statements on the company or, the entire life from this point on. It's just where prices are now, where the stock is now, and what our decision is right now. And right now I'm short the company, I'm short the stock via options and the short of the stock, both. So we'll see what happens after earnings. Maybe I'm wrong. I'm not saying I'm 100% going to be right, but that's what I predict. That's what my gut tells me. That's what my instincts tell me, and I trust those. So we'll see what happens. You don't need to trust those, or you can trust those. Up to you. Finally, we wanted to talk about something a little bit more China-specific. Chinese gasoline usage was apparently up 20%. That indicates reopening. Prices right now of gasoline are right around where they were at the beginning of December, or of oil as well, right around where they were at the beginning of December. China was in lockdown in December. I expect continuing increases in the price of oil and gasoline. That's obviously going to have its implications for the Fed. We'll see what they say about that when they have their meeting and press conference and questions. But in terms of our oil positioning, which we still have plenty of, what else do you want? China's opening, and we're getting the data that it's looking good. We might get some more data over the coming days, but it looks like China is reopening. Now, don't expect them to have a booming economy, new all-time highs in economy right away. I think there is going to be a global slowdown, but I think the supply-demand picture is tight enough. I do think demand's still going to continue to increase. Let's not forget, India is growing a lot. Africa is growing a lot. Oil consumption just does increase pretty much regardless of whether or not there's a recession. Yes, it will be less of a growth if there is a recession, but it looks like OPEC is prepared for that. We know the U.S. companies, they have invested in some production, but they haven't been pedal to the metal like they were during the Trump administration, where they were incentivized to just pump as much as they could because they were getting subsidies and whatever they were getting. It's a different environment now. So I expect oil to continue to do well. I'm adding to some stocks I like on days like today. Valera had pretty good earnings. They didn't seem to be impacted much by the fall in prices. Refinery margins are tremendous. So we have a video on PBF stock, one of the largest refiners in the country and our largest stock position. If you haven't yet, I do encourage you to watch that video. It's one of my beloved stocks, and it could hopefully provide you with some good analysis and something to work on with decision making on whether or not you're going to actually buy that stock. I have that stock, as you know, as I just said. So that's it for today. We'll see what tomorrow brings us. Might be a little bit more of the same, might be a little flat, might be a little up. We'll see what happens. The big day is the Fed. The next big day is Thursday, huge earnings. It's going to be an interesting week. So that's today's video. And until next time, peace out. Peace out.